Today, we're going to be talking about how to use your Amazon cash flow to build wealth for long into the future. Now, this isn't just about Amazon cash flow. This can really apply to any business that you have if you've got cash flow coming through that business. But ultimately, as an Amazon seller and somebody that's trained thousands of sellers to sell well on Amazon, there's so much more of an opportunity that exists with your Amazon business than you may have ever even realized. And this is not a sales pitch of any kind. This is just my own musings and thoughts over the last decade of being an Amazon seller and training so many people to do the same. And so in this, I'm going to discuss the different options that you have as your Amazon business is pulling in capital for you to use to reinvest into other things. Let's look at those options. Let's look at real estate. Let's look at investing in the stock market, at cryptocurrencies, and businesses as well, investing in businesses, what you can do to grow and scale with that Amazon cash flow that you have. Ultimately, Amazon is a cash flow business. It's more about cash flow and capital management than it is about anything else. You can have a highly profitable business on paper with very poor cash flow, and that would lead to cash constraints, which I cover on my channel and inside my Business Building Legends community much more extensively, actually. But ultimately, this is something that can change the trajectory of your future, not just your future, but the people that come after you, your children, your grandchildren, if you utilize your Amazon and e-commerce business properly to build wealth. So let's get into this. Now, first, this is a disclaimer. I am not a financial advisor. I'm just going to be going through the things that I've discovered over the years and kind of my own opinions on them. This is not, while I will provide actually the data and the reasons behind it, this is not something that I am dictating your future. So please just realize I'm not a financial advisor. Run all of this by your financial advisor to decide what would be best for you in your current situation. I don't know your finances. I just know mine, and I know what I am going to be doing moving forward based on the information I'll be covering here. Don't sue me, right? So this is a financial disclaimer. I am not a financial advisor, so don't come after me if you try some of these things and they don't work out. Ultimately, these are just opinions, and I just want you to be aware of that. All right, so what is the purpose for your business? We need to kind of come back to this. Ultimately, as you look at your business, especially in Amazon or e-commerce business, what purpose do you have behind it? For most people, that's going to be things like trying to care for their family, trying to get out of their day job and be at home with their family more and spend more time with one another. But for others, it's going to be trying to grow a much larger enterprise and trying to actually grow wealth much further beyond what they currently have. And so we have to look at what is the opportunity that you have as an entrepreneur as we are looking at all of the investment opportunities out there. Is Amazon even a good place for you to get started if you haven't even started yet? In my opinion, it is if you have the capital to back it up and to be able to manage that cash flow properly. But if you don't, then there may be other business opportunities that would be better for you to start. But then what do you do with that cash that comes through? And how do you invest it moving forward? Again, I'm not going to even be giving investment advice or even giving you an affiliate relationship to go talk to this financial investor. But this is something that we need to consider is how do we look long-term in our businesses? And so we have to realize that as entrepreneurs, this is one of the quickest ways to impact change. We are entrepreneurs. We are connecting with other sellers. We are connecting with community members. We are connecting with our customers on a day-to-day basis. And we impact change with every transaction that happens. Somebody gives you money for something, then you have received dollars for the products or services that you provide, and they've received that product or service. And you are impacting their lives in some way. If that's a positive transaction, then that's going to be a great thing that you've impacted in their life. If it's a negative transaction where they experience bad things from it, well, then ultimately that's a negative thing that you are impacting into their life. And so we have to look at our businesses as we are constantly impacting change in the lives of those for our customers, in the lives of our employees and team members, and in our own lives as well as our friends and family. The different changes that can happen is a change to your current way of life. So you may be starting your business now or looking at scaling it much further into the future, and you're seeing that if I continue to do well with this business, that my current way of life is going to change. I'm going to make more money. I'm going to have more time with my friends and family. I'm going to be able to grow in multiple different ways. This is a huge change that you need to keep close to yourself, that this is the impact that it can have on your own life. Additionally, you can change generationally the outlook of your family. If you do well in business and you invest properly into other things, then ultimately you are changing not just your current way of life, but you're changing the way of life of your children. Even if you are kind of an average business, you aren't making tons and tons of money, but you are getting by and you are, providing for your friends and family, then your kids are going to grow up seeing you be an entrepreneur. Your friends and your family are going to see you being an entrepreneur, contributing to society in that way. And that can create generational and lasting impact that you'll never even see, but it can ultimately encourage people around you to be entrepreneurs too. That could change their generations beyond them as well. This is a huge impact that can happen with being an entrepreneur. Additionally, you can have a change to your local economy. As you grow in an Amazon or e-commerce business, or really any business, if you are hiring people locally, that can change your local economy. If you're bringing in people, you're providing jobs for them, that can change their lives, their generational impact as well, because they're going to have kids that are going to see that your job that you're providing to their parents has provided them with their life that they currently live. There's a huge, massive change to your local economy. Additionally, there's a change to your ability to serve others. As an entrepreneur, your ability to serve others is extremely important, and you can serve through your business. In fact, it's one of the best ways to be able to serve others is by being a business owner that serves the community, serves the customers, serves the employees, the team members, and serves anyone else that interacts with your business. It's a massive change to what you can do in that area with your business. Additionally, there's your change to donations. As you are growing and your business becomes much larger, you have the ability to donate more if you are financially smart and you're handling the cash flow properly. And so these donations can make a massive difference in whatever causes that you care about, whether it's your church, whether it's a certain nonprofit organization, or it's even just people in your life that need money for a certain scenario that comes up that you have the ability to help them with. Now, you can't be helping everyone that comes through because that can become difficult and problematic, but ultimately it does give you more ability to do that in the right scenario or situation. It also changes culture because as you are influencing the people around you, the friends and family that you have, especially if you are a Christian business owner and you are running your business with those beliefs and those foundations, it can change the lives of people that are looking at you as someone that is leading the organization and moving the organization in the right direction. And so you can change culture just by being an entrepreneur. As we see businesses all the time try to change culture for good or bad, we can also impact that change as small business owners. Leveraging Amazon as cash flow is very important. Amazon is a cash flow business, meaning if you have a bunch of money coming through from sales, you also have a lot of money going out because of other expenses. And so you need to be able to manage that cash flow properly. It's something I cover extensively in my Business Building Legends community for sellers over 5K per month. How do we manage that cash flow in the right way and actually have a good picture of it? And if anyone's interested in applying for that, I recommend going to askjimmysmith.com/legends. You can learn all about it at that page. If you're under 5K per month, stick with this free training and get over that amount before you apply. But Amazon is a cash flow business. You may be profitable on paper, but have very poor cash flow because you bought bad products. Because of the way that accounting works and bookkeeping works, you can have a profit, a good profit margin, but have very bad cash flow that you've invested into bad inventory or into other things. And so Amazon is a cash flow business. You need to be able to manage the inflows and the outflows. And the inflows would be your income. The outflows would be expenses, inventory, other things that you're putting capital out to buy. As you are managing your cash flow properly, you're going to start having an abundance of that cash flow. Eventually, you may have a problem of not being able to find enough inventory to purchase. And so you can then change how you are going after wholesale suppliers or change how you're doing your arbitrage business or even change to private label business. But you can also take a look at the cash flow and say, you know what, I'm happy with the way my Amazon business is running. I'm going to reinvest a certain amount, but I'm also going to take another amount and put that aside for other investments so that we have multiple streams of income. As someone that's had over 30 different streams of income over the last decade, this is something that's very important so that you can have some stability in your business and in your life. Now, leveraging Amazon cash flow is very important, but there are some limiting beliefs that we typically see or that I typically see in people that are trying to run their businesses. And first is that their business is too small to be able to reinvest into other things. There's actually some pretty small investments you can make that through time has shown a good return on that money. And so this idea that your business is too small to then take money and put it into other things is just not true. Now, if you are saying your business is at a level where you want it to grow much more, then it may be too small for you to take money out of it and put it into other things. And it would be better for you to put it back into the business to grow it higher. But if you're saying that your business is too small and you can't separate even a portion of it as savings, as the ability to reinvest into other things, then ultimately it may just be a cash flow problem or a misunderstanding of how you can utilize that capital. But your business is not too small. Small investments can turn into much larger returns in the future if you invest them properly. Now, the second one is that there's no time. And this is a common one. I'm somebody that doesn't have kids, but I am married. And so I can't imagine being a single mother with multiple children that I have to manage a business and raise and, properly care for for multiple children. And so I know that there are difficulties here. However, with the no time piece, there are ways that you can leverage other people's time and multiply your time essentially to allow you to have freedom over your business time. You can't necessarily outsource too much of your time with your children, right? You want to make sure that you're spending time with them. But from a business perspective, you can outsource activities to allow you to have more time to focus on other things. And yes, that does cost money, but a lot of times people that are focused on a specific area of your business that you've outsourced to, they're going to be better at it than you will be over the long haul anyway. And so we have to take a look at that. How do we best manage our time? Because that is important. If you have any trouble with managing time, there's free videos on YouTube here that I recommend going through, because that will be very helpful. It'll give you much bigger returns into the future if you spend, an hour going through videos learning how to manage your time better. Now, the third one is I only need X amount. Like I only need $5,000 per month to live. I only need $10,000 per month to live. Some people might say I only need $50,000 per month to live, right? But ultimately it depends on your current situation. But if you look at it as I only need 5K per month to live, then you're also saying I only want to limit my impact on the world, my impact on my family, my impact on my local economy. I only want to limit it to that amount. I don't want to grow beyond that because I don't need more than that to live. This is a very prideful way to look at your business, that I myself only need this amount. I don't care about other people. I don't care about my children. I don't care about my friends, my family, the people that are looking to me in my business. I only need X amount. And ultimately, I understand that you can also have the flip side of that where you say, I need everything, right? But again, it's what is the prideful, parts of you? What is it saying, right? What are you saying? Are you saying that you only need $5,000 per month? And so I'm just going to stop there once I hit it? No, you should be looking at ways that you can impact your children, ways to continue to grow your business, to impact people around you, to impact your friends, your family, your local economy, and so much more. The donations that you can make to other nonprofits and causes as you grow your income. If you are looking at it from this way, then this is a very prideful way to look at it. Now, there is an important aspect of I need $5,000 per month first before I can start looking at other things. That is a potentially smart investment outlook. You don't want to say, oh, well, I'm only making $1,000 and I know I need $5,000, but I'm going to start taking the 500 out of my 1,000 and putting towards an investment when you can't even support yourself or your family. There's smarts to that. But if you get to a level where you are making what you need and you say, I'm just going to stop now because I don't need more, that can be a very selfish viewpoint, because ultimately you can put that money into other things. You can help other causes. You can do a lot more with the world for the world as your business grows, especially if you're looking at your generational change, your local economy change, the people that look up to you, your children, so much more. And so taking a look at this and trying to reframe that to say, okay, I need X amount, but then how can I make more so that I can impact more people? I can serve more people with the finances that are coming through. Now, another limiting belief here is that you don't know how. And while that is important, right? We need to know how to do these things. It is a limiting belief because you can learn. You can surround yourself with the right people. You can, go to networking events. You can speak to people that are doing this already. You can learn through free videos on YouTube. You can learn through paid communities. You can learn through free communities. There's so much that you can do to learn so you can grow and scale your business and then grow into other potential investments in the future. Now, my story is that actually I started with about $1,000 selling on Amazon back in 2015. And over the last 10 years, I've grown and scaled multiple 6- and 7-figure businesses online, and I've looked to add multiple streams of income. As I mentioned, I've done over 30 in the last 10 years. And so I know a lot about trying to make money online and in other places. Now, in starting with $1,000 on Amazon, I scaled and started adding those income streams, as I mentioned. I currently have 17 that are active. I actually believe it's a little bit more than this because I made this presentation, a while back, but I have more than that are active right now. Even though I've tried over 30, there are a good amount that are still active. There are some that just fizzled away, or I didn't like doing them, or they didn't make the money that was worth my time anymore. There's a lot that are active here. And that's just because I've slowly scaled them through time. And that's something that every Amazon seller or business owner can do as well, right? Maybe you run, I don't know, some sort of a small training facility. Maybe it's a sports training facility. You've got your own small gym. Well, you could add another revenue stream with that gym of potentially online community management, where you are training people online to do workouts at home. Or you could add another income stream of selling snacks and protein bars and protein shakes in your gym. Or you could sell shirts, or you could do just about anything else. You could start doing, personal training with businesses and having programs with them. There's ways to bring in other income in multiple different business types just by thinking a little bit out the box. But ultimately, they serve your main customer. They serve the people that you currently are serving in your business. And so it's a great way to start adding in more income streams. I've gone through at least 16 more. As I mentioned, I've gone through over 30. And in going through at least 16 more of these, this is something where I've found that even if I fail at some, that's okay, because I can have now over 17, over 20 active streams of income, I believe, where even though I failed on 16 others or I stopped doing them, the other 20 are still here and still profiting me in different ways. And you can slowly build them one at a time, just like I did over the last 10 years. Now, here is the key. Having a plan, connecting with other people, and experimenting on different streams of income. You may go through this presentation and find that you disagree with me, and that's fine, because again, these are my opinions. I'm not a financial advisor at all, and so you may experiment with things and find that some work for you or others do not. I have experimented with a lot of different business income streams and lost a lot of money in some of them and have made a lot of money in others, and so this is just the result of my experiments through adding income streams into my businesses. Here's kind of my business purposes outside of some of the generational change, outside of, representing Christ in my businesses, outside of all of that stuff. Here's my business purposes from an income standpoint. And so I have streams of income for Amazon, which is my cash flow coming into my business. We've got eBay, I've got affiliates, I've got YouTube, right? You're watching this on YouTube. I've got books and courses. Replen Dashboard is another software company I own. And I have other streams of income as well. Multiple different businesses that I own and operate with other people too. Now, whenever I have that, what I essentially am doing is taking the money from those things, putting them into the top of that funnel, essentially, and then being able to buy and invest in businesses at the bottom of that. So any additional money beyond my typical needs for living, I try to set that aside so that then I can invest in businesses that bring in more income, right? And so it just continues to repeat that cycle, and it continues to grow through time. That's the way that we can utilize our businesses to buy more income for ourselves. Especially if you're investing in an existing business, then you are buying income from that business, right? Whenever you purchase it, it already has capital running through it, versus starting a new one from scratch, putting out a bunch of expenses, and then hoping that the money comes back. You can actually buy businesses that have cash flow, that have systems and procedures and processes to follow to grow your capital. And so that is kind of my business purpose. There are some options here. You can actually build streams of income off of your Amazon business or whatever other business you currently are running. You can start to add new things in there. So you can start with arbitrage. You can then go to wholesale, which I've transitioned mainly to wholesale there. You can then add in some bundles into your business possibly. You can look at proven product partnering, where you are working with brands and you're making income from those brands. You can also look at selling on eBay or Walmart or any other platform that is out there right now to add in other streams of income, and it helps to diversify your business just from being on Amazon. Additionally, you can do affiliates for courses. You can be an affiliate for coaching. You can be an affiliate for my Legends community and bring in income from that if you want to recommend the community to other people. You can make money for being an affiliate, or even software programs, right? On Replen Dashboard, there's an affiliate program for Replen Dashboard. You can make money by referring other sellers to Replen Dashboard or other software tools that you know, use, and like, right? You can look at Amazon affiliate links that are shared with people in your network. Maybe you have an Amazon affiliate store, an Amazon influencer store on your Amazon account, and you can share your affiliate links with other people that you know, and you can just utilize those between each other and make a little bit of extra income just by sharing affiliate links. Additionally, you could do local Amazon trainings or local e-commerce trainings where you charge a service fee for having a 2-day workshop at the local chamber of commerce or at a local, hotel conference room that you rent out. You could do local Amazon or e-commerce trainings. You could also be a coach with the Jim Cockrum coaching program or have your own coaching program. You can do whatever you want. I'm a part of the Jim Cockrum coaching community, and so that's why I recommend this coaching program. But if you've got your own desire to be a coach, you could do that as well. Additionally, you could start your own prep center if you're used to prepping your own products. If this is an income stream that you'd like to pursue, you could do that as well. You can also do freelancing, where you help people just individually through Upwork or Fiverr, and you help them with listing management and optimization. There's all these different opportunities to build streams of income just off of your Amazon business. Now, as kind of a caveat or a warning, do not do all of them at once. You want to start building them slowly, one at a time, so that they can add into that overarching bucket where you're adding cash flow in to eventually buy and invest in other things. In my opinion, businesses is what I personally go after at this point. Now, so framework, step one. you want to start with one of those items, okay? Start with one of those other things. Once you have your Amazon business that you're currently running at a good level where you could take some time away and focus on something else, this is when you can start adding in other income streams into your business. The second step is to scale and outsource those items profitably. So you need to then take whatever that stream of income is and start scaling it to other people, virtual assistants, team members, etc., and outsource those profitably so that then you're bringing in profits. Even if it's reduced because of your team members, you can then bring in profits that then allow you to take in the extra activities that you're trying to build with more streams of income. And this is one of the things that we teach in the Legends community. But additionally, you can add one more, and that's the lowest resistance and highest potential. So if you look at that list or any other list that you have for streams of income opportunities, look at what's the easiest to add in that has a fairly high return on that investment. For some people, that could just be being an affiliate for software and coaching. It could be adding in wholesale instead of arbitrage because you're already selling products. You might as well now reach out to brands that allow you to scale your business. That could also be working with brands directly that has some low resistance. If you are connected with other people and you're able to help them, it's got a pretty high potential. So that could be the next one for you. But evaluating those opportunities, what looks to be the easiest to add in with the highest potential return would be the next one to add in. And then repeat that process over and over again. Continue adding more cash flow items or capital investments into that upper bucket so that then you can continue to add more streams of income through time. We do have a challenge here of cash flow management. So you do have to be good at managing cash flow. This is a very complex topic through Amazon once you get to a certain level. Whenever you're new, it's fairly simple. It's, you've got $5,000 to invest in inventory. You invest what you can, send it into Amazon. As you get more, you reinvest that into more inventory. But once you get to a certain level on Amazon, managing cash flow can become difficult, which is why I've got so much training now inside of the Business Building Legends community with spreadsheets for how to manage it and all these things, because cash flow management is so important to being able to do this properly and scale properly. This is one way that you can start to do this. This is Profit First. I've done videos on my YouTube channel for Profit First where you're taking capital from your Amazon business and you're separating them out into different buckets so that way they are assigned to the right category that you can utilize. So Profit First, essentially, you could take, for example, these are not hard and fast rules. You're going to have to talk to your financial advisor for what would be best. But you could take 10% of your capital from Amazon and put that into a profit account. Then you could take 15% and put that towards owner's compensation. You could take 20% of that and put it towards inventory and additional inventory expenses. Take 15% for taxes, and then your operating expenses would be the last 40% there. And so you can start to do this so you can set aside profit that then could be reinvested into other businesses or business models, and you are able to manage your capital properly. Now, there's more to Profit First than just this, but this is the basic idea of you are separating different expenses or buckets into percentage allocation that you take from your Amazon disbursement and put into those separate accounts. And so I recommend reading that book by Mike Michalowicz. It's a great book to learn how to kind of manage it from a profit first mindset, but we still need to manage the cash flow properly. Now, additionally, so here's an example. So if you have $10,000 in sales on Amazon, you get $6,000 of a disbursement after your Amazon fees. They typically are going to take about 40% depending on, the products you're selling. Now you have $3,500 of your cost of goods sold. So for those $10,000 in sales, you spent $3,500 on inventory. And so essentially you would then take $6,000 minus the $3,500 that you spent on that inventory, and you have $2,500 of profit left over. That would be your gross profit, not your net profit. Now then you take the $2,500 left over and you use the allocations that you come up with your financial advisor to then separate those out. And in my example, that would be profit 10%. You'd put $250 into a profit bucket. You would then put 15% owner's compensation or $375 into compensating yourself for that activity. You would then take 20% for inventory. So you add another $500 on top of the $3,500 that you already spent. That way you're growing your inventory. You'd then be spending $4,000 in your inventory. So that way you can grow your sales, which allows you to grow all these other numbers as well. Additionally, you'd set aside taxes, 15% or whatever the number would be for you. Let's just call that $375 into its own separate account. That way at the end of the year, you can pay that out or through quarterly, whatever your financial situation is. And then for operating expenses, 40% approximately. It could be 50 for you, it could be 60, it could be 30 if you've got lower overhead. And so I just put an example, 40%, you put $1,000 aside. Operating expenses could cover things like prep and ship costs. It could cover things like virtual assistants. It could cover a lot of different items, but that would be an example of how you would utilize Profit First and manage some of the basics of the cash flow. There's a lot more that goes into it for planning and trying to forecast your sales and your capital that you're going to have. But ultimately, this is the basics of Profit First and how you can get started with it. Again, talk to your bookkeeper, accountant, tax person to get help with that if you're looking to manage your business with a profit first model. Additionally, each year, that profit would then be $3,000 if you were to have the exact same sales every time. The owner's compensation would have been $4,500. Your inventory, you'd be adding actually $6,000 extra to it. And so technically your business should be growing instead of staying flat. But ultimately, these are just the conservative amounts, right? What if you grew your business monthly? Instead of $10,000 per month, you went to 15 the next month, and then you went to 20 the next month, or however long that takes you. Ultimately, if you were to do that, you're going to see a much larger return that then you can utilize your cash flow for different things. And so what can we use this cash flow for? We can use it for scaling, where we are going to be hiring new people. We're going to be bringing out virtual assistants into our team. We're going to be able to scale our business. The next thing would be software. So you can scale through software, where you're adding in software tools that are going to allow you to do things faster, and they're going to actually automate it for you. For instance, with repricing, I utilize Aura. They have automation features that I really love, and that saves me tons of time and saves my team tons of time. The next thing you do with scaling is bringing on those other team members, as I mentioned. And then additionally, you could utilize that cash flow to set aside for other investments. And that's kind of where we are starting to set the stage for what are those other investments and how do we utilize our capital for other things that we can have for generational change in our lives and in our businesses. So investment opportunities typically are going to come down to a few different items. I'm just going through the main ones. I'm not saying you have to do these. I'm going to show you the failure rates of these and what typically would show a better return for your business. So first up, a lot of people think about is real estate, whether it's commercial, residential, whatever it might be. There are people that make tons and tons of money in real estate, and there are people that have failed miserably in real estate. And I have seen the ups and downs from people in my own circle. I've also had good real estate experiences and bad real estate investment experiences. But ultimately, let's take a look at the actual data that's behind this. There's a 95% failure rate with real estate. Now, where do I get that? Well, this is actually from Yankee Capital Partners. The real estate failure rate is high. Investors suffer from a 95% chance of unprofitability as a result of factors they ignored before they began investing in property. Even just from this own site, it talks about investors, and even the top 10 reasons to invest in multifamily real estate is on here. But it does talk about how the real estate failure is 95%. So that's pretty high. That doesn't mean that you won't be one of the people that are in the 5% that succeed, but a 95% chance of unprofitability, that doesn't really give you a good likelihood of success. Typically, the people that do best in real estate are able to invest in a lot of different properties that allow them to have so much economies of scale that they can make up the difference. But if you are just a one-off investor with one or two real estate rental properties, you can have high amounts of mistakes that come in and hurt your potential to succeed with it. I'm not saying you can't talk to your financial advisor on these things, but this is just the data that I have been able to find, right? Here's another one from Bigger Pockets. This was a post made. It says, why do 95% of real estate investors fail? So it's not just that one site. There's another site here that talks about this as well. Let's take a look at the stock market. Now, 85% of the stock market people underperform the S&P 500. Pretty crazy. We've had, at this point of this recording, some pretty great times for the stock market in recent years, but we've also seen crashes, right? In 06, 08, around that time period where the stock market just crashed. And so you've got to be careful with this. But ultimately, 85% of people that try to invest into stocks underperform just doing the S&P 500. The majority of people would be better off just putting it into the S&P 500 and hoping for the best. Again, talk to your financial advisor on that. Let's take a look at CNBC. It says stock picking has a terrible track record and it's getting worse. And it says here, last year they found that after 10 years, 85% of large cap funds underperform the S&P 500. And after 15 years, nearly 92% are trailing the index of the S&P 500. And so this is something that's very important. We should not be trying to pick and choose our stocks based off this failure rate, right? That it would be better off for the majority of people to have just invested in the S&P 500, at least for the 85% that are underperforming. Now, you can do very well with this, so you can have the right managers that can manage your account, but ultimately the S&P 500 would be a better choice for 85% of stock investors because of this statistic. And so this is important to know. If you're looking to invest in stocks and you're trying to pick and choose the best ones, that can be risky. So talk to your financial advisor on what would be best for that if you decide to invest in stocks. 80% lose money over time, which is pretty crazy to think about. And this is from Acquisition International. So over time, 80% of people, stock investors, end up losing money, 10% barely break even, and only 10% succeed. So these can be tough statistics to swallow, but you also have to understand that many investors fail due to their own actions or lack thereof. So it's pretty crazy to think. It even says it is estimated that out of all first-time investors, 90% aren't able to make any kind of profit with the stock exchange. So you have to be careful. You have to be very good at what you're doing, or partner with someone that is very good at what they're doing. And I'm not going to make any recommendations on that because I don't have any. Okay. The next thing that people are currently excited about is cryptocurrencies and crypto in general. Now, full disclosure, I invest in crypto. I have money into crypto and specific crypto because I believe in the utility behind their currency. Right? But this is a hugely volatile issue. I've lost a lot of money in crypto and I've made a good amount of money in crypto as well. So don't get me started about the failure rates with crypto. But as we get into this, there is utility to it, which is why you need to be wise about what you're investing in. But to make income and cash flow with crypto is very difficult. You see people all the time on Twitter and other places that are like, I made all this money. I made millions of dollars. I turned $1,000 into $500,000 overnight. Okay, maybe that can happen, but it is difficult and you just have to be lucky for the majority of those people. You can also invest wisely into cryptocurrencies. If you believe in the strength of Bitcoin and or Ethereum or some of these other currencies, then that could be an excellent investment for you if you believe in it and you want to put money into it. 90% of cryptocurrencies fail. So can you imagine if in the world 90% of currencies failed? That'd be insane. So the fact that 90% of the actual currencies fail is ridiculous. So what I would recommend for most people is to talk to a financial advisor that understands the differences between cryptocurrencies and stock investing and real estate and what would be best for your financial situation. And if you decide to look at cryptocurrencies, look at the stable ones. Look at the ones that have consistent growth. Look at the ones that are being adopted throughout the world by different countries and reserves. These are the things that you can do if you're looking into getting into crypto and you want to try to do it wisely. Talk to people that know it. I'm not somebody that is a crypto expert. I just have investments into certain things that I believe in. That would be a recommendation I would make for most people. If you believe in it and you're willing to lose the money, then ultimately you have to be willing to lose the money with crypto because you just never know. Here it says that some studies suggest that up to 90% of cryptocurrencies fail. This is not just for my own perusing. This is actually, hey, here is an article where I got that information. Buying or starting businesses. Let's take a look at this one because this is the one that I am most excited about, the one that I've done a couple times at this point. Now, what percentage of small businesses fail each year? Fewer than you think. Survival rates for small businesses. So 80% of businesses with employees will survive their first year. 80% make it 1 year. 70% of businesses with employees will survive their second year. 50% of businesses with employees will survive their fifth year, and 30% of businesses will survive their 10th year. So between years 5 and 10, you have a 50% success rate at year 5. You have a 30% success rate at year 10. So a 70% failure rate. And so let's also then take a look at SBA loan default rates. If you were to buy a business and you were to take out an SBA loan to buy that business, let's take a look at the default rates. You can typically see anywhere, or at least whenever I did the research, from 1.74% of SBA loans default to up to 20% of those loans default. Okay, so that means that they failed. Now here, PayNet found that 1.74% of loans and leases to small businesses have defaulted in the last 12 months. That was between May 2021 and May of 2022 that article came out. But then this one says the percentage of loans and leases that defaulted in the last 12 months is 2.01% instead of the 1.74%. And then this one says that more than 1 in 6 loans, 17.4% awarded from 2006 through 2015, went into default. So we're looking at 17% on this article. There's no real good number behind this from what I've been able to find. Okay. Whenever we take a look at the failure rates between all these different investments, let's take a look at that. First, real estate is at 95% failure rate, as we showed. Now, again, some people may argue with me on that, but I just showed the data that I found. All right. Second, stocks, the failure rate versus the S&P 500 is 80 to 85% of investors will fail at that. Now, the next one is crypto. That's high. We don't even have failure rate percentages. Besides, 90% of the actual currencies fail, and you can get scammed and all kinds of crazy stuff in crypto, much more than you can in other things. Then the next thing is starting a business. So after 10 years of running a business, 70% of them fail. So you have the lowest chance of failure with starting a business. Now it's just starting a business. What if we were to buy a business? Well, with the SBA, it's anywhere from 2 to 17% of those loans end up defaulting, which means they end up failing. So if you're able to buy a business and the SBA backs it, then you actually have a very high chance of succeeding because you're buying an existing business that has capital, and the SBA has shown that it's only a 2 to 20% failure rate with those loans. And typically SBA loans are around 10 years, by the way. So starting a business is 70% failure rate, buying a business is 2 to 20% failure rate. So you have a much lower failure rate buying an existing business that makes money and has employees. That was a key differentiator on the graph. It had to have employees, but you have a very low failure rate buying through the SBA based on those numbers, right? Again, talk to your financial advisor and make sure that you are on the same page with these things and look at the right businesses. You can't just buy any business and say, all right, cool, we're going to be good. Otherwise, you'll be in the 2 to 20% that fail. You have to actually have a lot of due diligence. The reason for this actually is because businesses businesses, whenever you're buying them, they have a lot of people involved in that process. You have lawyers, you have accountants, you not only have the buying person, you also have the selling person. You have a third party that comes in and tells you what the value of that business is. You have the SBA looking at it. You have the bank looking at it. You have the government essentially looking at it through the SBA saying, okay, we believe that this loan has a high chance of succeeding. And so that's why if you can get a loan through the SBA, it can give you some more confidence that you have a 2 to 20% failure rate only versus a much higher rate with some of these other things. So again, weigh your odds on what you would like to do. If you love real estate, then try to be one of the 5% that makes it. If you love stocks, then try to be one of the 20% that makes it. If you're someone looking for what's the safest route, then talk to your financial advisor and see what would be safe. Because ultimately, looking at these statistics, I've chosen to invest in businesses. I can't guarantee that that's what would work well for you. I can't even guarantee it's going to work well for me, right? This is a hypothesis, so to speak, based on these numbers. Now, continuing to look at this, businesses sell and their sale prices vary. So typically, you're going to see a 3 times multiple of their net profits or their seller discretionary earnings, what the seller brings home as net profits plus their income. And so if we're looking at this, a $300,000 net profit business or seller discretionary earning business could have around a $900,000 sales price. Could be a little less, could be a little bit more, but that's typically common for small businesses. If you're looking at big businesses or tech businesses, they could have a 10x multiple of other things, but ultimately this is what you're going to see on a small business for sale level. Now, not only that, but an SBA loan only requires 10% down usually. And so if you're able to get an SBA backed loan, then you can put down only 10% to buy a business that has a huge return. So a $10,000 down and a $100,000 purchase price gets you a business that's doing around $33,000 in profit. $25,000 down is a $250,000 business purchase price, and that's around, $80,000 or so of profit per year. $100,000 down will get you $1 million business, which is doing around $350,000 of profit or seller discretionary earnings based on those averages, right? This isn't going to be, perfect, but that's just on average. So that's pretty impressive, right? You can put down $100,000 to get a business that is doing $333,000 of net profit on average. And that's pretty cool, right? Especially if you buy the right business with the right team and the systems in place. Now, what's the profitability after that loan payment? This is something that's important, right? Because if you're getting a loan, you've got an extra payment that's going to reduce the profits that you take home or the cash flow that you take home in the business. So let's look at this. This is examples only. Okay. This is based on whenever I ran these numbers, but $10,000 down, that's on a business that costs $100,000, right? Because you're doing it for 10%. Well, a $100,000 business should have roughly on average $33,000 in profits. That loan would cost you around $14,500 per year, and that would leave you with $18,500 of profits year one. Now, a business that's selling for $100,000 is probably going to have a lot more time investment on your part. It's going to have a potential of failing a lot more than something that's doing $1 million plus that has a bunch of employees and a long track record. But you get the gist here, right? You still have around $18,500 of profits year one if everything else stayed the same and you were just adding in the loan expense. Now, the $25,000 business has around $83,000 in profits. This is a $250,000 purchase price based on this example. You take out $36,500 for the loan, you have around $46,500 in profits year one after the loan costs. Pretty cool if everything else stays the same, right? If the business starts to decline, you could fail, right? If this business grows, you could make more. So something to keep in mind. And then $100,000 down is $333,000 in profits on average there because you're buying $1 million business. It's $146,000 for the loan, around $10,000 to $12,000 per month, depending on the interest rates. And that's about $187,000 in profits year one. And you invested $100,000 of your own money, right? You've then taken on the liability of the loan, but ultimately you do have the ability to get more year one than you put into the business to start, which is pretty crazy. And a lot of times whenever you put down money for a loan, you also get working capital and back from the loan. So you get an additional cash injection into your bank from that loan, which is pretty cool. It's a whole separate topic that I recommend you check into. Talk to your financial advisor or whoever you trust about this. Again, I'm not one. These are just examples of things that I'm looking at. Where do you buy businesses? So that's the next thing. So there are multiple options to purchase businesses. You can utilize your cash flow for this. You can work with business brokers. You could go to flippa.com if you trust their services. They have a lot of other business brokerage services at flippa.com for you. There's kingsbridgebrokers.com. It's actually one of the companies that I've utilized in the past. There's also websiteclosers.com if you're looking for online businesses as well. And then there's empireflippers.com, which is another online business opportunity. But a business broker or Kingsbridge brokers as well can help you buy local businesses and not just online ones. So it's kind of up to you. The online ones may have more volatility. It depends on the industry that you're going into, whether it's offline or online, but it's up to you. There are multiple places to buy businesses, and you could see the statistics to support that would be a potentially good idea for you depending on your financial situation. So there's many more places to buy businesses. You could even just walk up to a local business owner that you like in your area and you could say, hey, are you looking to sell? Are you looking to transition out of this? There are a lot of businesses that are going away because people don't have anyone to sell to. They don't know who to sell to. And there are many business owners that may be willing to say, yeah, I will sell you this business. All you have to do is give me a percentage of the profits over the years and I'll train you to take it over and all these things, right? There's potential opportunities out there. It's very hard right now for business owners to sell just because small businesses aren't, the thing that a lot of people are looking into. And I know that there are influencers out there on YouTube and other places that go through how to buy businesses. You have to be careful with some of that, but ultimately there's tons of opportunity if you are interested in this model. It will require more of your time potentially than, buying stocks where you just look at the numbers on the screen each day. Or with a business, you're going to have to deal with employees and turnover and some of the other issues that come up with that. But ultimately, this could be a potential good place to invest your capital wisely, depending on what your financial advisor says. So how do you turn Amazon cash flow that you get in your business or whatever business you run into multiple streams of income? First, you need to know your purpose. You need to have an understanding of why you were doing this and the generational change, the local economy change, and so much more. The next thing is you want to build one of them at a time. So that way you're not getting overwhelmed with too many streams of income at once. The third thing is to reinvest those profits into more streams of income, typically easier to add ones, like I mentioned earlier with the Amazon business. The fourth thing is buying businesses is the most stable investment based on the numbers that I showed you. And again, there could be people with, other articles or things that they could show that would potentially, take me away from this hypothesis. And it multiplies wealth if you do it properly. You can also fail in it. So just know, full disclosure, you can fail doing all of this stuff, but this is kind of my hypothesis, my opinion of what it looks like based off of the data that I showed you. Buy and invest in businesses, more get added to that funnel. And ultimately you continue to add that in to buy and invest in more businesses. And eventually you can buy and invest in real estate, stocks, crypto. You can do these things. I've done all of those things at some point, and I still continue to invest in some of them. But this is a great way that you can start to look at your business in a different way. Again, one more reminder here, don't sue me. I'm not a financial advisor. This is just my opinion based on the articles that I showed you. Talk to a financial advisor, talk to people that are trained and specialized in this. This is just my own knowledge, and this is the only thing that, just my own opinion. All right. So I just want you to be aware of that. Now, if you're someone that is looking to get started in scaling your Amazon business and you're trying to learn more about how you can scale into multiple streams of income, you want to add in Walmart, eBay, Shopify, other platforms that you can sell into. You want to learn about adding arbitrage, wholesale, private label, bundles, all of these other things, and then scaling into other opportunities. I want to let you know about my Business Building Legends community. Now, it includes Amazon training, eBay, Walmart, freelancing, bundling, wholesale, and more. There's tons of content already just in there. And there's going to be more that continue to get added each and every month, right? Each and every day, essentially. There's more content on growing and scaling income streams. That's what we are going to be continuing to focus on, is how do you grow into much bigger places in your business. Additionally, there's high-level conversations and there's networking that happens. There's community and collaboration calls. There's meetups. There's mastermind groups with coaching each and every month. So there's so much in here from a high-level perspective on how to grow and scale your business. Additionally, regional meetups are something that we would like to do. We currently do an annual meetup so that conference members or members in the Legends community can get together, but there are regional meetups potentially planned, and many times that mastermind group members can meet up together to learn with one another. And then there's over 70 standard operating procedures. It's actually over 100 now. I made this presentation a little while ago, but to grow and scale your Amazon business, 10 weeks of training from me and much, much more on how to scale your business. Go to askjimmysmith.com/legends. You can apply to join, because ultimately that's what we are here for. We want to make sure that we bring in the right members. I recommend if you're at 5K per month minimum on your Amazon business or e-commerce business, that's when you reach out. If you're below 5K per month, I have tons of free training on this channel and other places. You can go check that out at your leisure. I've got links down below to check out all the free training, free resources, and guides as well. But if you're at 5K per month or more, definitely check out applying for the Business Building Legends community. We are here to help you along the way to grow and scale. And so I hope that this opened your eyes a little bit to the power of the cash flow business that Amazon provides us in our lives. And I hope that this is something that is fruitful and that you can utilize in your business and in your life. Again, talk to your financial advisor. Full disclaimer, I am not one. And so ask your questions down below. I'm happy to answer anything that I can. Since I'm not a financial advisor, I have to be careful with some of that. I can't tell you what's the best investment versus something else. I can just tell you what my opinion is based off the research that I've done. But if you do have any questions, post them down below. I hope this video helped you and blessed you. You have a great rest of your day and a blessed rest of your week.